You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.
Good morning. Today is Friday, December 14th, 2018. This is your Options News Rundown. I'm Dan Passarelli. Our first story today is from investing.com. It's the top 5 things to know in the market on Friday. First thing to know is attention turns to a deluge of U.S. data. Among the downpour of U.S. economic data due on Friday, investors will focus on retail sales for November. It came out at 7:30 a.m. Eastern, as they look for further signs on the strength of the American consumer. The consensus forecast is that the report was to show retail sales rising 0.1% last month, after a 0.8% increase in October. Excluding the automobile sector, sales are expected to increase 0.2%. Rising retail sales over time correlate with stronger economic growth, while weaker sales signal a declining economy. Consumer spending accounts for as much as 70% of U.S. economic growth. Also on the economic calendar, traders await industrial production for November at 9:15 a.m. and preliminary purchasing managers indices for the manufacturing and services sectors in December from IHS Markit at 9:45 a.m. Eastern. Second thing to note today is weak growth futures from China and Europe add to investors' malaise. While waiting for U.S. data, economic indicators elsewhere spooked investors in overnight trade on Friday. China's worse than expected retail sales saw their weakest growth in 15 years, while industrial output rose the least in nearly 3 years, casting further doubt over demand in the world's second largest economy. Japanese business confidence and plans for capital expenditures managed to hold steady in December, but the Bank of Japan's Tankan survey, released overnight, showed companies expected conditions to worsen in the next 3 months. Over in Europe, data from the Eurozone revealed the weakest business activity in the private sector in just over 4 years, highlighting the slowing growth in the region. The Bundesbank also warned Friday that growth in Germany, the motor of the Euro economy, will slow in coming years. Coming on the back of remarks made by European Central Bank President Mario Draghi on Thursday that risks to the economic outlook for the region were tilting to the downside. The third thing to note today is global stocks tumble over economic concerns. After a mixed close on Wall Street Thursday, the weak Chinese data sent Asian stocks into a tailspin. China's Shanghai Composite closed with losses of 1.5%, while Japan's Nikkei 225 slumped 2.1%. The downbeat mood spread to Europe, where the region's own weak data had only added pessimism to the sell-off with all major European indices in the red. The Pan-European Stocks 600 fell 0.98% by 5:38 a.m. Eastern Time. Fourth thing to note today is risks of U.S. recession jumps to highest level since financial crisis. Amid worries over the global economy, the risk of a recession in the U.S. during the next 2 years jumped to 40% according to a recent Reuters survey. That was compared to the 35% seen when the poll was conducted in November and was the highest level since January of 2008, just months before the beginning of the financial crisis that led to the Great Recession. As market attention shifts to the Federal Reserve's monetary policy decision next week, economists have been ratcheting down expectations that the central bank will be able to continue the current pace of rate hikes next year. While markets widely anticipate that the Fed will hike rates by a quarter point at next week's meeting, they are pricing in just one further increase in 2019. And the fifth thing to note today is oil dips after a boost from supply deficit hopes. Oil prices headed lower on Friday as investors took profit after nearly a 3% surge in the prior session. Thursday's boost was thanks to updated forecasts from the International Energy Agency, which said it expects supply deficit in the second quarter of 2019 if OPEC and its allies move forward with plans to reduce output starting in January. U.S. crude futures lost 20 cents, or 0.38%, to $52.38 by 5:41 a.m. Eastern, while Brent oil traded down 29 cents, or 0.47%, to $61.16. Our next story today is from Investing.com. China to halt additional tariffs on U.S.-made cars as trade dispute de-escalates. China will suspend additional tariffs on U.S.-made vehicles and auto parts for 3 months starting January 1st, 2019, the country's finance ministry said on Friday, following a truce in a trade war between the world's two largest economies. The Ministry of Finance, in a statement on its website, also said it hopes China and the United States can speed up negotiations to remove all additional tariffs on each other's goods. This is a good signal that China and the United States are on a track to resolve the trade war. This from Wang Sun, director of the China Automobile Dealers Association, in their import committee. Car makers might be ordering a large number of imported cars now. Shortly after the Chinese Finance Ministry announcement, Tesla said it had cut prices on its Model S and Model X vehicles in China. And that, ladies and gentlemen, is news you can use for today, Friday, December 14th, 2018, your Options News Rundown. I'm Dan Passarelli, trade smart, and have a great day.
Thank you for listening to the Options News Rundown. To learn more about these stories or any other developments from the world of options, visit www.theoptionsinsider.com, the premier source for free options information. The Options News Rundown is brought to you by Market Taker Mentoring, the leader in option trader education. Get trader education, daily trade ideas, and more with a free 1-week trial of Market Taker Mentoring's live Advantage group coaching class by visiting markettaker.com/insider.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.